I'm Jen. Welcome to another Alpha Hour Blockchain Banter. We had Brad and Patrick unfortunately couldn't make it, but I'm glad that Will and Caesar and Mark and Tyler are able to be here with us. So thank you guys for joining. Um, I guess I can kind of start it off. I think the biggest thing that, well, aside from yesterday, right, that was kind of a kind of that was a big deal here. Um, but base, right? We saw a lot of people bridging over to base and kind of making some plays over there. I just figured I'd kind of start us off and see if anybody did any sort of interacting with anything over on base.
I haven't bridged yet because you can't bridge off. But I'm monitoring everything that's being launched there pretty much on the hour, every hour. So it's been interesting to see that kind of play out. But yeah, that's where I'm at.
I heard that you can't bridge off. You can only bridge over. I've also seen some people say they've made some ridiculous. Some say that the rug pulls are in abundance over there right now.
Yeah, it's been
Well,
pretty bad. Oh, go ahead, Mark.
I was going to say, when you've got a captive audience that can't go anywhere, it's I think the temptation is just too great for some of the projects that are getting set up.
The rumor is that like end of like the first or second week of August, you're supposed to be able to bridge off. So the current narrative is, okay, well, a bunch of multimillionaires were just created over the last 48 hours where there's no way to bridge off of that chain. So it's just going to turn into this like shitcoin casino, like the same cash just circulating around the same kind of projects that pop up. So that's kind of the narrative.
So you are bridging over there?
Maybe. I mean, I bridge to every chain, so I feel like I have to just to keep it going. But yeah, I'll probably do it as soon as I get some free time.
Caesar, have you been over there at all?
Yeah, I'm actually on vacation. All I got my cell phone, which is pretty. I feel like crack addict without his pipe. Yeah, so I haven't bridged. I didn't even know it went live. I've been like completely out of the loop. Just kind of. The only thing I know that happened was like the curve stuff yesterday, and that kind of scared me. Like the worst time. Like I've got bags. I've got stuff in in the pools that are like Alchemix. So yeah, it's kind of shitty. It's worse. So you can't avoid it though, right? No matter when you go on vacation, something like this is gonna happen, right? But yeah. So I have no idea about base.
Oh, that's
Dude, I'm sorry to
terrible.
hear about that.
Yeah, I don't
Yeah,
know if
were you
I don't know if there's a lot like I haven't heard any updates since yeah, since it was revealed from Curve and the Viper, what was it? The Viper deployer or something like that was compromised.
Yeah.
Um so yeah, sorry to hear that,
It
Caesar.
feels it
What
feels
I
like everyone's just kind of waiting. You know what I mean? Like there's this I don't know. There's like a tension. It's thick, in a bunch of the channels that I lurk in. Like people are talking about it, but no one really wants to, call it. You know what I mean? I feel like it's everyone's got this feeling like their dog just died.
What's the biggest concern? Is it Michael getting liquidated or is it something bigger than that? I can't even comprehend that.
That's yeah. I mean, that's a pretty that's a pretty dramatic concern. So I think Michael's position is like what 30 is like 30% of the curve supply. I think
Yeah, that sounds
somewhere
right.
in that ballpark. Yeah, and like curve liquidity has always been relatively thin. So because the project has always been structured around this like staking incentive, and there's like tons of lockups and that kind of thing, which is can be really good for this like artificial scarcity. And I don't mean that in a derogatory manner. I mean like there is a product market fit with creating scarcity, and Curve has done that relatively well. But the cost of scarcity is that liquidity can be really hard to come by. And so if there is going to be, a catastrophic liquidation, actually, I don't even think that it can be liquidated. Like, even if the liquidation price gets reached, it's not clear what a liquidator is going to do with it. It reminds me of, do you remember this exact situation has come up before on Solana, where there was a whale that was going to get liquidated and the DAO had to like seize control of the funds. Do you know what I'm talking about?
Yeah, I
vaguely
do remember that.
Yeah.
Yeah, this is like basically, like, it's not exactly the same, but it's pretty similar. It's just that the ability to liquidate that loan is like it's non-existent. It's if that loan does get liquidated, it's just like the Curve token would just become meaningless.
I think it's that. I think it's also really hard for a lot of people to kind of stomach who have been here for so long, who have seen certain DeFi protocols be kind of like the grandfathers of DeFi, and then be, vulnerable to these sorts of hacks or exploits, or just the vulnerabilities in general. You kind of see them as like they are the framework, like the groundwork for a lot of DeFi. I think it was.
I just sorry. I just saw Banter tweeted out that someone returned the money. So I'm not sure. That's all he said. Thank you, Coffee, for returning the money. I would expect that maybe that might be.
I think, is that like Coffee Girl? Coffee. I've seen a little bit. I think that they run an arbitrage bot and they were front running some of these attacks and actually returning the money. So I don't know. Was that a recent one?
That's what I saw too.
Yeah, that makes sense. That makes a lot of sense.
Yeah, I saw that they were responsible for front running a few of these different attacks and then returning the money. So definitely like good actors out there, which is really nice. Caesar, were you directly affected? Can I ask that with this?
Yeah, actually, I'm actually in a good position. Sadly, like I've sold my Alchemix ETH, so I have to buy it back to pay off debt to regain my collateral. So if it goes to zero or 30 cents on the dollar or something like that, it's actually make money, right? But like I'm shorting it, but I didn't do it intentionally. It was a long-term play. I was just like, oh, I'm going to put this here. I'm going to take some money out and use, like I was using it for like to borrow to fiat so that I could, I don't have to pay taxes. So I'm actually in a good position, but at the same time, I'm on vacation, like I don't have my computer set up and all this kind of stuff. So it's just like,
yeah, I get you.
Yeah, it's just oh God, should I, like, even if I wanted, like if it was at like 30 cents on the dollar right now, I couldn't actually take advantage of that, right? Mind you, I think they pulled most of the liquidity anyways. So there's probably no liquidity to even buy.
Why does this always happen when you're on vacation? I mean, there's like a running joke in my channel that's like, as soon as I go to the beach, like everyone needs to exit the market because it's just guaranteed that like everything's going to go negative 90% that day. It just is like, it's how this industry works, I swear.
Yeah, it's like fate or something, right? There's some sort of like twist of like easy come, easy go, like thanks for having like coming out, we're gonna tax you now. Like it's like the gods are just the DeFi gods are just
You've been expecting.
Well, this just in, the fuck bald token is now the #1 token on Base right now. So
I'm sorry.
That sounds that's on brand. Like that's exactly right.
So yeah, so if you're not following the Base like tokens right now, I have like deck screeners. They're like #1 token is fuck bald, because the bald liquidity provider that, like, this was the narrative behind bald token, was everyone was connecting this to Coinbase because the LP that started the pool had like $35 million in it, which is like exceptional for a brand new microcap. And they connected the deployer with they own some ridiculous amount of CBETH, which is Coinbase's ETH derivative token. And so everyone was like, oh, this has got to be like Brian Armstrong. This has got to be Coinbase. And that's what led to this like whatever 40,000% gain in 24 hours. And then that the LP just pulled all the money. So it now has like, I don't know, maybe $1 million, down from 36 million. So I think go ahead.
Is that the one that tweeted the apology? Did you guys see that?
Oh, was it? I didn't even see it. I'm
That
just
was
like looking for.
I saw something like Steady Lads, but I don't know if that was him.
Okay.
It was. I shared it. It was someone who had created, a project over there and said, I'm really sorry, and tagged a bunch of people, and I really needed this money or I was broke,
Oh
but
no,
I'm gonna.
that's something else. That's somebody else. They were doing a pre-seed, and this is like, to anyone listening, don't do scammy pre-seeds. So this guy just like started a Telegram group. He collected, I think, like $1 million or something in ETH from like some pretty big influencers, and then they just ghosted the channel. And said they were going to like multiply their ETH, and they promised to return the funds after they like did a 5x. So yeah, not sure how much alpha there is on base right now. It kind of looks like the start of any other shitcoin chain, but I'm going to be optimistic here. It's got the right narrative, so we just have to keep the faith, I think.
It's B&B all
Dude.
over again.
Yeah, the alpha is to stay away. That's the alpha.
That's like, if I could go back in time and tell like Tyler from 2020, who was like getting hard into DeFi tokens and everything, just, you know what? Maybe just don't sell your ETH and don't trade your ETH for anything else, and you'll be fine. That was the alpha.
It's a good time to remind like the entire industry that sometimes like doing nothing is a 100% legitimate strategy, right? Like, don't feel like you always have to do stuff. It's okay. Like, it's not just about, it's not just about making money. It's about keeping it. And, sometimes that means sitting still, and that's okay.
I think that was
it's really important advice. I mean, it's not something that people talk about because it's just not sexy. It's not a sexy portfolio management strategy to just say like, no, I'm good with the macro caps and having my entire portfolio full of 2 coins, and I'm never going to trade them. But if you're, if you're in this for the long run, typically that is the best strategy. Go ahead, Jen. Sorry.
No, that's okay. I was just going to say, I think those were like my biggest L's. And I remember, I even tweeted about them. I was very open about them. It was FOMO, and it was getting into like these scammy sort of shit coins that I knew better than to get into. But it was I think at the time, my mentality was, well, what's the point of being in DeFi and being so early if I'm not going to play with this and the opportunities that I have? And lesson learned.
Such a trap.
You know how I handle this?
Right.
I handle this with wallet aliases. I have a whole bunch of wallets, and some wallets I consider them just like hardcore, like risk off. Like I don't do anything. Some are like mercenary wallets. Some are like degen wallets, and I just keep them separate so that they never like really. Sometimes I have to fund each other with gas and stuff like this, or I need $1,000 to go onto this shitcoin, right? But for the most part, if I keep them separated like that, and the mentality is very different. So when I switch to that wallet, I switch my mindset, and then I'm pretty safe in that. So I have HODL wallets that are just sitting there, and they don't do nothing. They just constantly just like, farming CRV and convex and stuff like that. I find that that's the best way to handle this.
I know, like, I've met so many people that have got like a no-touch wallet, that's either it's like just filled with ETH or just filled with Bitcoin. And they're like, I don't even keep it at my house because I don't want to like be tempted to use it.
Caesar, I think you mentioned that on the last call, and I thought that was a great, I know you didn't mean it as a sort of recommendation or suggestion, but I think that that's like a great move to make, is having separate wallets and not mixing those sorts of funds,
Yeah, I think it's like people that, they have a position and a token they like, and they talk to me about like, how they would use Carbon, which is a new product that Bancor just released. And they're like, I don't really want to trade with my full stack. And I'm like, then don't. Like, swing traders exist, and they never trade with their entire stack. take 5%, take 10%, and see if you can range trade it and accumulate more over time. I mean, like, you never have to go all in. I think that's important alpha for sure.
I'm reading a book right now called Fortune's Formula. So it's about like Claude Shannon and Thorpe and Kelly, and I'm sorry, I don't remember their full names, but it was the guys who developed like the math behind card counting. And a lot of it is exactly what Tyler's saying. Um, it's structuring, especially in the betting markets, but especially investing. It's like structuring your investments such that you don't have a situation where it can financially ruin you. And so Caesar's like strategy is by far the best. So like you just compartmentalize things, and then you only risk like on the you kind of understand your risk. Like if you're going to do the degen thing, if you do your whole portfolio, like you might wipe yourself out. And it's just removing. You don't want to have any percent of your whole portfolio where the risk is it'll completely wipe you out. But then the game's over. It just doesn't matter. And so it's really interesting. Like, I mean, there's the kind of physical ways to do this is really just brilliant. Just having separate wallets and just not touching them. Like, perfect. Take the psychology out of it. Like that's really great advice.
Like I even take it a little farther. Like all the banks and the zappers and stuff, I don't even bundle them. So like it also gives you the benefit of like you're looking at a wallet and there's like, oh, there's not enough money in there. I need to keep going. I need more. I need to work harder. You know what I mean? It gives you motivation because you look at a wallet and it's not enough, right? But you might have enough spread across all of your wallets, but you don't see them compiled together. So you never have that mindset of, oh, I've done enough, I can relax, I can take it easy. So it also has that benefit as well. So I never sometimes my friends like, hey, I need some ETH. And he's like, oh, I have ETH, I know I have it, I got to find it in the wallet because it's there, I can see it there, right? But see, for me, I have to actually physically change the wallet. Well, not physically, click the buttons, right? But change the wallet over, scan all the wallets, hunt down ETH if I needed to. And most of the time, it's just like, yeah, I don't have it. You know what I mean? So it makes you much more safer, and it also keeps you like motivated to keep hustling, right?
So I want to go back something, Mark, when you said it's such a trap. Were you talking about the FOMO that I felt, or were you talking about me, thinking, having that sort of mentality, like if I'm here so early, then why not take advantage of this? Because I'm kind of curious, we see new chains pop up, and there seems to be this sort of trend with the number of legitimate protocols or sort of projects that we're seeing on them are limited. It's more the scams and things that, and maybe I'm wrong. You guys, if you disagree with me, by all means, like speak up and let's talk about it. But, in my opinion, when some of these new chains, the majority of them launch, this is kind of what you're seeing, right? So is it the FOMO that you were referring to earlier, or was it what's the point of being here so early if I'm not going to take advantage of it?
They might be one and the same thing. It's not necessarily FOMO. I think FOMO generally refers to the fact that, some coin is going crazy and you're worried that, if you don't get on it now, you might miss out on, everything that's going to develop. So I don't think it's necessarily that. I think it's kind of this, maybe a sense of like overexcitement, maybe. Kind of, in a way, it's similar to how people like spending habits change when they like go on vacation or something. Like someone might be really frugal with their finances, in their day-to-day life. But then for some reason, when, they go on vacation, they like buy a whole bunch of shit that they would never usually buy. And it's more that sort of like getting steeped in the culture, right? It's almost a ritual of, hey, I'm here to spend money. Let's spend some money. I think, even gamblers are like that. I've met, I've grown up with a lot of gamblers, and it's not that they're necessarily like loose with money, right? Sometimes the complete opposite. They can be extremely tight with cash. But then, when they show up at the card table, or if they go to the races or whatever it is that they're doing, it's like all of a sudden it completely flips. It's like, I am here to do this thing, and that's what I'm going to do. Like, why would I even come to the to the dog races if I'm not going to spend a whole bunch of money doing this? And sometimes it's not even that they're there to win, and this is one of the things I think people don't really understand about people with a gambling addiction, is that they generally don't even expect to win ever. I used to be a gaming machine attendant, and I saw, like, night after night, people would, they would sometimes win a lot of money, but it wouldn't really matter because they would then take that money and like put it all back into the machine anyway. So it was never really about, winning money. It's more about, I don't know, like this, I don't know, you might even call it like spiritual or habitual. I don't even know what to call it. But I think it's exactly the same with these kinds of like shitcoin scams. People know that they're going to lose a lot of money on it, right? I don't think I've ever met anyone who trades these coins and, got rugged 100 times and really thought that that next time they would buy a shitcoin that they've never heard of before with a, for a token with a project with no website and no product, that they would, this time it was going to work out. They just don't believe that. I think they just do it because this is what people are here for. And in a way, I think that the marketing mill, and, crypto Twitter and, the YouTube channels like BitBoy and others, they kind of feed that, right? They kind of invite you into it. And it's weird that I think, they even pretend that it's legitimate. You could actually make, money this way, because I don't think anyone believes it. We know that they don't believe it. But it works and people do it anyway. It's a very, very complex and, uniquely human behavior. And I would like to understand it more, but yeah, Caesar, what do you think?
Yeah, I think I said this last time, or I've said it recently somewhere. And I wrote this article a little while ago called Miss Shilmister. And it kind of talks about this idea that like people, they just want to, they think they're smart enough to ride the waves, because the wave will happen. Like, like what you just said, like BitBoy. If BitBoy's going to like shill some shitcoin, it's going to pump. It's probably going to rug, but it's going to pump, right? So everybody, like, there's a lot of people out there, I would think, that are like, oh, it's going to pump, so I'm going to ride it, and I'm just going to get off the wave before it folds over and crashes on everybody. So I think there's a lot of intelligent people who are playing it as well, and have a systematic system to get out before, like maybe take back their capital and then ride a little bit, and when it doubles, take back that, and then get out. You know what I mean? Like, there might be people who are doing that instead of just, all the apes who just like, send ETH to wallets for pre-mints, like. So I think it's a case of like the whole industry is kind of playing along for the most part. Like, I don't really do it, and I'm sure there's a lot of people who don't play in there and don't jump in there, but there's definitely capital that's playing it and pushing those prices up and making it like, and then giving the ruggability, right? So there's a lot of problems with it. Like, I think it, like what you're saying about the addiction and stuff like that. Like, there's definitely that kind of aspect of people saying, oh, they're doing it for whatever reason, the thrill, the habit, just spending their time, or the fact that they want to feel that like euphoric like win. But then there's also people who are like, like the drug dealers basically, who are just playing along.
I'm not even, yeah, like I agree with you, but I'm not even sure it's that. I think sometimes it's a sense of belonging, like, oh, it's almost like a rite of passage to get rugged in crypto, like, I'm not sure if that makes sense.
Really makes sense, because that was literally, I mean, that was like a big joke back in 2020. I think it was like my first rug, and it was like, oh, welcome to crypto. Like, she's officially here. Oh, we lost Caesar. Go ahead, Will. I'll bring Caesar back up.
Yeah, a couple things on the gaming. I've been kind of fascinated with this too. I think to add on to kind of your sense on it, like on the addiction side, I think cortisol, like there might be a link between some kind of addiction to cortisol, is when those losses are so big. But I think you put your finger on it, on the sense of belonging, because you got to think, like, no offense to Link Marines, but it's like that whole group was because of things going sideways. And I'm a huge Chainlink holder. Like, I'm not disparaging them. I'm also a little afraid of them. They're kind of wild. But, there's like, I was I went down the rabbit hole on the like MGM and Las Vegas Sands a couple years ago. I went out to Vegas and like was researching these companies. There's so much psychology involved in all of that. And what I have been reading, even in that same book, was um, that the people who enjoy gambling the most are wired in a way that they get more of a thrill on the upside than they do on the downside. And very, very similar to what you start off with. If there's an environment you go in, you think, well, I'm bringing X number of dollars to lose, and it's like this is it's a strange thing to just to go in and accept. Like where else in society are you going to do that? Like I'm not going to go to the grocery store. Like fuck it, I'm going to lose $1,000 here. Like it's weird behavior, but it is just like it's through the prism of entertainment. And I found myself like I went to Vegas. I barely bet. It just wasn't my thing. I won like $3 and that was it. Like my buddy was furious. He was just like, "Why aren't you walking around with cash?" I'm like, "It's just I don't know, man." Like it kind of made me sad because it was right around when the stimulus checks came out, and I was watching just a lot of people coming here and just like flood that cash away, and I was like, "Oh, dude, this is something's up here." But that's a whole different story. But Mark, I think you're really touching on like some key points.
I think people come to crypto to participate, and when they come, and if somebody were to say, well, the best way to get exposure to crypto is to hold like Bitcoin and ETH, right, for a long time, they're going to be like, no, I want to do things in crypto. What do you tell them, right? I mean, they're going to get into trading, maybe they'll get into DeFi. There's not a whole lot of opportunity, and like maybe this is what Hayden Adams was getting at last week to his like kind of ironic tweet about like use cases and like what are we building, like what kind of programs are we building within DeFi and on chain, and it's really just like what can you do today? It's trade, swap some tokens for other tokens, and maybe do a little lending and do a little bit of borrowing, right? Like there's not much more to do beyond that. So I do think you also get a large group of people that are like, well, I want to participate in crypto, and the only way I can really do it is trade. So I'm sure it's like it's a little bit of the gambling stuff mixed in with a little bit of the fact that like there isn't really a whole lot to do. Maybe that's like GameFi. Maybe that's an open door for them to do something more in this industry too.
Well, it also, I think, kind of goes back to one of the major narratives, and I don't even know if it is still or if it was just a week long, but I keep seeing, continuous tweets and things about it. But going back to the casino and gambling, was at least, one of the major narratives that I was noticing. We had spoken about the Telegram bot last week. We didn't really speak to the gaming and the GameFi and the casinos and stuff, but this is something that I'm seeing more of right now in the industry. And so maybe it speaks to what they actually want. I also think you had an amazing point, Tyler, that we've like Mark mentioned culture. It's part of the culture. This is the culture that all of us like here in the industry that are involved in DeFi right now are creating for ourselves and for others who are joining. And so when we aren't offering more than that for them to use and to benefit from, or, to take advantage of, or to just play around with, then out of default, they're going more towards those sorts of projects and that's sort of the culture versus the
Yeah.
adfi and being able to, legitimately get into DeFi for, I think, what it was really meant to be.
Right. And it's like it's time horizons too. Like I'll just drop some projects that I've been trading. I bought some moons, which is like Reddit's like native incentive token. And I bought it like 40 cents and it's down to like 26 cents. It's done terrible. And then I bought a coin called Espresso, which is some like micro cap Telegram bot coin that has done a 3x. And it's like at the end of the day, I'm completely breaking even. I haven't made any money. I haven't lost any money, but I'm having a great time. So it's like I've still enjoyed the aspect of trading it, but it's been pretty much zero sum completely, which is maybe the best you can expect at this point. But yeah, I think it's a lot of just that cyclical stuff. And then like as far as like crypto casinos and stuff, like that's something that's been attempted many times, and I'm not really sure who's done that successfully. Maybe Rollbit, Maybe Rollbit will be the first. I don't know, but I'm not super informed on Rollbit's like tokenomics and their like business structure.
On a high level thing, and I think I touched on this last week, is something that is encouraging about all this speculation is that this speculation and innovation are very closely related. Like the lines are very blurred. And so I do like how this space has an abundance of speculation, but it just means like the attention is there. Whereas, you don't have a lot of speculation like banking, or stuff like that, like very established industries. At least you hope not. But so in that sense, like it's still, even though I cringe sometimes, I'm like, you know what, it's good, it's still here. I don't want to participate as much as I can, but you know, it's fun to laugh. But I hate that people do get caught up in maybe they were like what Mark and Tyler were saying, just like there was a sense of belonging, and I wish you didn't have to lose money to gain that. So hopefully, hopefully that'll change, or some community will pop up that'll satisfy that need.
Yeah, I mean, it's honestly like I think if I had to go back in time and like give myself advice, I would tell myself to. It's like if you want to trade, then like trade and accumulate the coins that you want to accumulate on the long time span, and that's what I didn't do right, and that's what I tell people that are interested in getting into the market today. It's like if you want exposure to ETH, like buy ETH, and like if you want to trade it, then like trade it on Carbon, range trade it and accumulate more ETH. It's the same with the Bitcoin maxis. Everything they do, like it's very cultish. But when people talk about other tokens and they're like Bitcoin maxi friends are like, did you sell Bitcoin? And they're like, I'm stacking sats, right? I'm going to keep stacking Bitcoin until the day that I die. And however I get there is like perfectly acceptable to me. So I think it's also to say like, as long as you know why you're trading, then that's better than most. I think it's just this like blindly aping into crappy micro caps that are going to lose you money is always going to be you're going to lose all your money quickly.
Go ahead, Caesar.
Yeah, I try not to do trading to accumulate. I generally do yield farming for accumulation. So I try to yield farm tokens that I think are going to blast off in the next bull run. So I'm trying to do that mostly. Or maybe, I might do a little bit of selling and compounding and stuff like that. But another thing that the thought about like why are these people like doing the casino thing is because like builders, they're busy. It takes a lot of work to build something, test it, bring it into prod and stuff like that. So there's a lot of people in DeFi, a lot of people have a lot of money who don't have anything to do, right? They're not building anything. They're not running communities. They're like, why would I want to be a Discord mod when I've got like, $7 million or something, whatever that number might be for the individuals, right? So it becomes, they're bored. They're just like, oh, I don't mind risking $1,000, 20,000, or whatever that number is again. So they're just trading and they're just playing these coins. They're just playing the trends and stuff like that. And then there are other people who are actually good at calling trends and starting trends and influencing trends and stuff like this. So like I think it's the fact that they've got nothing to do. Like they probably don't have a normal job anymore because they made like tons of coin on the last bull run. So they don't need to work. So they're just like, oh, my job is trading shit coins or NFTs or whatever it is that they're swapping, right?
I feel exposed. That wasn't directed at me, I hope.
No,
I'm kidding. I'm totally kidding.
Tyler's like, I have $8 million.
What Caesar
hasn't.
Caesar, if you don't mind me putting you on the spot, are there any like any success stories with the yield farming that you said you've kind of deployed for accumulating coins? Is there any projects that you're really happy with that you've been doing for maybe longer than a few months?
Yeah, I would have to say no, because it's like crab and all the accumulating coins is pretty much crab with shit coins. With governance tokens generally means slowly rugging, right? So it's slowly, all of them are just basically slowly going down. But if a bull run does come in, then I expect them to run with it, right? Like I've chosen projects that of teams that I believe are here for the long run, and that will eventually, the price will eventually go up. But like it's definitely not a short term, like 1 month play, 2 month play. Like there's probably some of them, but like I'm busy too, right? Like, I'm constantly doing stuff, so I don't check my prices very often. So that's why I'm kind of taking that mindset that I don't have time to check the prices of all of these tokens every day and see if I should exit yet. So I'm kind of more like, oh, I'm going to just accumulate like things that I think will take off when everything starts really taking off.
Right. Yeah, it's like so much easier to farm in a bull run, or like right before a bull run, obviously. Um, but yeah, just didn't know if there are any that I was missing. Um, I know a bunch of curve farmers that I hope are okay, considering what's been going on the last 24 hours. But yeah, I'm always interested in hearing what farms are producing actual yield. And yeah, speculative farming is definitely something that I feel like I've just been doing the last couple of years since the last bull run. Not getting too far with it.
Are you still seeing a lot of that sort of speculative farming happening? I mean, I think
Uh,
we had this on a previous call, but like at what point, like the incentivizing the TVL at the sake of your token actually worth it for your project and your token?
I,
If like you said, it's kind of slowly rugging, right? So you're accumulating this, but is it actually at the end of the day worth what you're putting into it?
I haven't seen it. I mean, I think I think the last cycle's been cooled off for a long time now. So I think like Caesar's strategy actually makes a lot of sense. Again, he knows why he's doing it and he has a plan. So he's in a better position than most. And yeah, I do agree with his thought that considering there is a next cycle, right? Like that's always the like, what if there's not one, right? That's the
That was
pessimist versus that's like the pessimist
horrible.
versus the optimist, right? Like you don't know. It's who you are and what you want to believe. And I've just been in the market a long time. I've seen it die 10 times now, and it's still here, and I think it's strong. So yeah, these farming plays do quite well considering that the cycle comes back. And all of these assets are obviously they're tied to Bitcoin, they're tied to ETH, and that has a huge impact. If Bitcoin and ETH are going multiples up, chances are that the accumulation you've done over a year or 2 years is really going to pay off. But there's risk, obviously. The cycle's not guaranteed to come back. A lot of people are excited for 2024, and there's a lot of macro stuff with Bitcoin. The mining rewards happening, and obviously, ETH's had gone to POS. The proof of stake upgrade is, I think, been a positive effect on the market, and I think it's introduced some like fundamentals that weren't previously there. But then there's always the pessimistic narrative, like, well, did proof of stake make ETH a security? Right? Like, I'm sure Gary Gensler is thinking
Right.
one thing, and I'm thinking something else. So yeah, it's a lot of what ifs.
Yeah. I also,
You
oh,
know,
God.
no, no, go ahead, finish your thoughts, and I might change the topic a little bit.
No, no, no. Go ahead. We only have, 15 minutes or so left. So if you want to change the topic, go ahead and change it. If we want to revisit, we can.
Okay, cool. It was just along the lines of everything that's going on in the curve. Um, and I've been reading a lot of financial history, and I think I touched on this. It was probably on a separate blockchain banner, but that as this space grows, I think the next kind of infrastructure that needs to get built, which it's already kind of there, is insurance. And it's I don't know how you can insure something like this, but I'm sure somebody could figure it out. But it's like with all these hacks happen, it's just part of the liability. But like if you're able to somewhat cover that in a reliable way, like then you could really expand. And I was just it's really sad to see. There was something different about seeing this curve happen. And this curve's such an established player. It's like like I hate seeing that. I'm used to seeing it on, less known protocols that haven't been around for a while. And it was just like you see the action by this actor to find a vulnerability. Say, Jesus Christ, like these people are relentless. But I was just thinking about that a lot, of just like how the insurance, how we know it today, how that developed. It took a few hundred years, but I like I'm hopeful that that can develop further into the crypto space.
What I think about the insurance and why it's so hard is because underwriting it is just incredibly hard. Like, how could like what you said, like something like Curve was like what people would consider like unhackable per se. But like I would like to put out there that it wasn't like their core product that was hacked, as far as I know. I'm not an expert on it, but it's like because I'm on vacation and I haven't really dug deep. But as far as I know, it was like their newest version factory pools or something. So it's not like the core was, curve is wrecked, right? It's just kind of like these peripherals, these modules that were on the outside of it kind of got exploited. And the exploit is pretty crazy. Like I heard it's like an issue with like the Viper compiler. So the compiler compiled the code incorrectly and left an exploit. So the code itself was fine or something. It's really beyond my understanding right now, and probably always will, because I don't want to learn Python. But yeah, so I think insurance, like underwriting insurance, is really hard because like if you're underwriting insurance for automotive, they have tons of data. They've got decades of like driving data, psychology, traffic stuff. Like they have all that data already, but like DeFi is like 3 years old, and it's like constantly changing. Like every day there's like this new like primitive, this new idea. Like okay, they generally are building on those core, stable coins, lending, borrowing, or swapping, right? And then maybe perps as well, like if you don't consider perps swapping, right? Which I don't really, but anyhow, so they have like those core products. So there's not a whole bunch of new innovative like ideas and stuff, except maybe, I don't know, like scanning your eyeball or something like this, right? But yeah, so like it's hard to, but it's still hard to underwrite it because the code constantly is getting changed, right?
I think I've seen more of the like parametric crop insurance and things of that sort popping up. And I think they have that sort of data and that sort of history that you were speaking about, Caesar, whereas, maybe DeFi protocols themselves don't. So being
It,
able to underwrite something like that is going to be more attainable, I'll say.
un-
Go ahead.
underwriting it, like Caesar's correct in this. Like the underwriting is never really an issue because that just means that you price it higher, right? And so it could be that that it is totally possible, like even after 3 years, to correctly price an insurance premium like across all blockchains. But the premium will be very, very high, I think. We've the amount of money stolen across DeFi, it kind of dwarfs the world record bank heists right up until the invention of blockchains. It's kind of it's ironic that this infrastructure was developed with sort of a security mindset and has proven to be anything but. I think the real challenge with insurance in this field isn't necessarily how expensive it is, but how it's investigated. So, for example, imagine that, let's say that the Curve DAO or even the Curve founders had taken an insurance policy, against hacks of this kind. And maybe, for all we know, they actually do have an insurance policy against it. There's, it's not out of the realm of possibility that there are some, private insurers that are, dealing with some of the larger projects. I don't think that would be overly surprising. But the difficulty is that you would have to prove beyond like any sort of, shred of a doubt that it wasn't you that exploited the protocol. And that's really, really hard because, in a traditional insurance claim, of course, like if your house burns down, the first thing that they do is send out an arson investigator who will determine, what was the cause of the fire, and if it's suspicious, they will challenge your insurance claim. With a DeFi protocol hack, it is, it's very believable that you deliberately built a bug into your system, and then decided to exploit it, and then make an insurance claim. And how do you investigate this? So it's not even the underwriting in terms of the total valuation, because like I said, that just means you charge a higher premium. Markets will always find the right price eventually. In this case, the actual product itself, I think, is nearly impossible, because it requires something akin to omniscience to be able to investigate your client, because we have to assume, if you are an insurance company, that the person who is making a claim is trying to exploit you, that they stole money from themselves and are basically, sandwich attacking your option, and trying to get additional money out of you. And that is why insurance is so hard in DeFi, because what do you know? Nothing, right? At the end of the day, all you can see is that there was some transaction hash, and you have absolutely no idea who controls that wallet address. And you have, you can assert that your client controls that address, and therefore you won't pay them out. And that will make, future clients very unlikely to accept your insurance product. And similarly, people who want legitimate insurance also don't want to be suspected of attacking their own protocol. It's I just don't see how this can be set up. There might be some version of the blockchain infrastructure eventually where these kinds of problems won't exist. But if we get there, it won't be preserving things like anonymity, right? I think that's the real problem, is that anonymity is incompatible with insurance.
It's funny to think about, even say 300 years ago, and like we touched on this, when insurance was run basically out of coffee houses. And to your point, somebody's ship sank that they insured. Can you imagine that argument between him and the underwriter? Like, wait, did you do this? Like, no, dude, I did not. Like, I have no idea what you're talking about. And there was fraud. And it's like, it is just to Caesar's point, it's like, we have a few years under our belt, and it's like, maybe we figured out. And to Mark's point, it's like, well, on the pricing side, you're right. It's the premiums will be high. Like, you'll find a pricing, but it is just, I guess, with any other insurance product, it's the complex side of like the proving and all that. But I'm sure everyone's had this conversation every century, and hopefully we'll figure it out. I just think that'll alleviate some degree of pain points. Maybe we don't need it. I don't know. But go ahead, Caesar.
Yeah, a little while ago, I did a tweet poll, and just like I had a thought, and I was just like, I'm going to put it out here and see what people say, right? And the poll was like, what do you guys think about DeFi exploits? They are, and I think if I recall, the answers were done out of spite, done out of like malicious, like theft, or basically rug, and the actual poll answers were comparable. Like rugged malicious was the winner. Like, so they are thinking they're black hats, people stealing other people's money, right? So that was the majority, but there were quite a few votes for like spite, and then obviously rug pulls as well. Like, so it's very hard, like you're saying, it's very hard to know who's doing them. Like I even like, of course, I sometimes think like who would be better to exploit like DeFi protocols than actual DeFi builders? You know what I mean? Like, I'm not accusing anybody, but like they do have the expertise, right? Mind you, I guess, pirates can be pirates, and like, a captain can be a captain, and it's about integrity as well. But everybody's anonymous, so it's really hard to separate them and be like, oh, I could really believe that person who that alias who I trust is also a black hat on on the side or something. You know what I mean? That would be
Right.
something I wouldn't find impossible to believe.
Yeah, and I think the piracy parallel is like worth considering for a second, because like there's like historically there are two kinds of pirates. There predominantly are the essential business, like piracy as a business. And for anyone who hasn't seen the CGP Grey video series on these, I think there's two of them, which really sort of explains business management and branding from a piracy perspective, and it's absolutely beautiful, and I can't recommend it enough. But yeah, essentially, there are people that are going to be exploiting DeFi protocols to make a living. And so long as that opportunity is always on the table, there's always going to be someone who's going to take it. But then I think that there's like maybe particularly in DeFi, just because of the way that everything is set up, and if you're not, sponsored by the North Korean government, for example, to try and exploit these protocols, and I suspect that the attack on Curve was probably state sponsored. But there are other hacks, like the DAO hacker, for example, where I really wonder if they're just an anarchist, right? Where they just kind of think that this is a game. They know that they can't get the money off of the chain, right? They're never going to send it to Coinbase and be able to withdraw those funds or anything. They're never going to do anything useful with it. And like, people, I think, often are under this misapprehension that, oh yeah, but they can always like buy an NFT from another one of their wallets or something in order to try and like launder the money that way. But chain analysis is all over that shit. There's literally no conceivable way that some of these hackers are ever going to get that money off of the chain. It's just never going to happen. But they do it anyway. And yeah, it's not entirely clear why. Like, I wish I could actually meet one of these people one day and just interview them about their motivation and things. I wonder if it's because, yeah, maybe not out of spite, but maybe because they find it amusing. A lot of this blockchain stuff started on 4chan. And 4chan has got like this really weird history of like doing stuff sometimes for like political activism, but also just doing terrible shit because they think it's funny. And I wonder if there is that kind of aspect to it. Yeah, not necessarily some people just want to watch the world burn, but some people just get that bored that having like an effect, even if a terrible effect, I don't know, maybe it gives them like a sense of power, maybe, or something. I don't entirely understand it, but I think I can recognize it. And I think that there is that aspect of like villainy to the piracy parallel that I think is probably right on the money.
Some of
That's
these
what I
guys
was
are
going
just guys are just kids too. Like, like how crappy were you when you were like 19 and you're like, you had the power to like rug $20 million from a group of people? Like, there might be some of that too. Go ahead, Jen. Sorry.
No, that's okay. I was just going to say we have like 3 minutes. So I saw all three of you unmute at the same time, Will, Caesar, and Tyler. So I just wanted to quick throw it out there. 3 minutes, go.
I just agree with Mort. There's some other incentives here that when you look through it through your eyes, it's like, well, I wouldn't have done that, or I can't conceive of doing that. It's like, well, there's a lot of things that, I'll just speak personally, I can't understand, but I do have some recognition, like that people are very different and strange and do different things for, just like the gamblers. It's like, I don't like to gamble, but other people do. Okay. So I disagree with this point. There's a lot of nuance here.
Caesar, you wanted to add to it?
Yeah. The person whoever, whether it's an entity, a single person, or an organization, the ability of them to actually crack Curve is impressive. Like, it's not a small act. It's not a simple rug pull, right? And the way they did it, they dug deep and they found something, a super like basement backdoor, right? Which is impressive. And the people who did this are very likely to already be financially stable. Like, someone who can do that probably has wallets that are playing DeFi very well.
Unless they're being held in a North Korean prison. Like, don't forget, some of these people are literally slaves.
No, that's true too. Yeah. That's very true as well. Yeah, but like,
their family might be held hostage.
But like my point about the anarchist person, like if that anarchist is probably someone who's not, desperate for money, who's trying to make a living, they're probably like, yeah, like I'm going to see if I can, get the big guys, take down Goliath, right? And even if they can't gloat about it, they can't come on Twitter, they can't go on like a stage and say I did that. They still know in their heart that they did it. So it's like an achievement, like climbing Mount Everest by yourself. You know what I mean? Like something like that. So I agree with that. Like there are many different kinds of people out there that could be doing this, and for many different reasons. And what you just said about like North Korea prison, that's something I haven't really thought about. Like I thought it would just be like citizens as opposed to like slaves. But yeah, that's pretty scary.
No, this is like, this is something that one of my best friends through university is from Shanghai, and we used to like joke in kind of a not joking way during like the Olympics, like when the Chinese athletes like weren't getting medals because basically their families are never going to get released from jail now. Like this is just what happens, and it's important to realize that in some of these places, like the people that are actually performing these attacks, they might not have a choice.
Super interesting note to leave it on. Really quickly, we do have to. We got a little. But really quickly, going back to anonymity, there was a woman that was co-hosting a blockchain banter series with us previously. Her name, well, she goes by the Rug Doc. But I would definitely recommend checking that out, because even a lot of these, what she was saying at one point was a lot of these protocols that do these rug pulls are the same people behind them. They just fork it, they relaunch, they rebrand, and rug pull. And it's over and over. What they actually offer is, if developers, there is that safety aspect, right? So if they want to stay anonymous, what they can actually do is kind of almost KYC through her, and she will say, look, they're anonymous here on Twitter or everywhere else, but they are holding themselves accountable, and this is something that you can look at. I mean, I think it comes down to a lot of it is also the tools that we have available to us. I don't know if a lot of DeFi is using the tools that we have. There are a lot of amazing big brains here in the industry that have created tools that they've made available to all of us to get a little bit more insight, as to who's behind these sorts of projects and things. And, we talk about looking at everything on chain, but I think there's more to it also. And I just kind of wanted to give her a little shout out here, because it's something that I have recently, visited, and just kind of wanted to revisit with everyone else on the call also.
Such an appropriate place to end it.
Yeah,
like
really
the
well
real
said.
alpha. The real alpha sometimes is coming from the industry analysts, like the people that are really, really close to the security level. And ironically, the people that are collaborating with chain analysis and government investigative agencies, they're the guys that you should be paying very close attention to, and less so people like BitBoy Crypto.
100%. Know that she does, the Rug Doc. So yeah, definitely recommend checking her out and looking more into the tools that are available to us. I think that is kind of the alpha that so many have undug or like dug up for us that we're just really not taking advantage of. With that though, we do have to end. Thank you guys so much for joining us. Thank you to Will, Caesar, Mark, Tyler for getting up here and joining me in the discussion. Thank you to all of the listeners. The call was recorded, so if you want to go back, re-listen to anything, it'll be available. And we'll be doing this every Monday, so hopefully you'll join us next week. Tomorrow we have our trading crypto call. That's going to be at 4 p.m. UTC. So if you are a trader or you want to get a little bit more into trading, definitely recommend checking that out. Thank you guys so much.
Thanks, Jen.
Thank you, everyone.
Thank you.